Wow. Okay. Good morning. And Sarah's not really as scary as it all seems. Thanks, Sydney. I don't know how this paid advertisement got up on the board, but we'll live with it. I'm Vince Molinari. I know a lot of, I think the brochure has me listed as CEO of WISA Capital. We've recently done a name change to Liquid M Capital, and that is a wholly owned subsidiary of Liquid Markets Group. I'm still getting the names down. We are a broker-dealer hosting an ATS for unregistered and private securities, as well as a Quotation Bureau, in addition to a qualified matching service to transact in non-traded limited partnership interests.
Okay, where's the play button?
Right here?
Up.
Oh, here we go. I could do it manually if that was easier.
It just was a manual for now.
Okay, cool.
On the top button it says play. The top button? Right here? Oh, okay, right here.
All right, here we go. So a little format change. So this was originally thought about as the topic, and we've converted to a panel. So, Wall Street and digital assets, will ICO investments change the investment landscape? So we have a resounding answer to that, and it's yes. And the yes is really kind of it depends, right? And it goes to exactly what Sarah is talking about. We wrote a petition to the SEC in March of this past year requesting that the SEC deem digital assets as securities, right? And we don't want to overuse the Howey test, but pointing to the Howey test in particular instances and recognizing, as Sarah quite adequately pointed out, it is not the only test, but it gives a framework of understanding. So if you're aggregating capital, if there's an expectation of a rate of return, if there's a third-party promoter, manager, in all likelihood, that's probably a security, just as a kind of a general rule. So we looked at the phenomenon, and it's really the intersection, as we'd say, of innovative technologies in this great tool called blockchain. And we'll just pause there for a second and say, time out. Blockchain is absolutely wonderful, but in the world of securities, it's really not doing anything differently than we've done our entire careers. It is trading, clearing, settling, and perhaps holder of record in a much different way, more efficient. And guess what? It's doing it in an immutable way, but it hasn't created a new anything for the securities world. It's just doing it perhaps better. So if we take that recognition for a moment and say, how do we collaborate? How do we look at compromise from the world of our wonderful world of technology, ICOs, blockchain, and an intersection with securities law? There is the yes. So our petition basically said to the SEC, guess what? This isn't as scary as one would think if you then recognize and embrace the fact that this is a security business. If we want to pretend that all other things are going on, and some may posit to set up foundations and offshore entities, and there's confusion amongst what we'll call investors who may be deemed to be donors doing non-refundable donations, I'm not so sure that's the clarity that we want. You can't transact in a cryptocurrency and move it from a wallet to buy a security in anonymity. Guess what? You need AML, you need KYC, you need investor protection. So our position was really born on how do we create a holistic marketplace to better use innovative technologies and modernization of securities laws to more efficiently and effectively aggregate capital globally. And we can use that wonderful word that we all use, democratization of capital formation. The other side of that democratization of capital formation is a responsibility to investors and to have investor protection. So most cases, and I say broadly most cases, when we look at a lot of the ICO issuances as utilities, we begin to look at a lack of connectivity to what investor rights are, understanding of what the instruments they're purchasing, and how there's a responsible mechanism that perhaps tones down overfunding or the lack of a lot of information that may be beyond what's required in just a white paper. So I guess I'm totally off track with our slides here, but I really don't like slides in the first place, so I'll try to keep up with this. Here's a bit of an analysis from Bloomberg, right? Nearly $3 billion in aggregated capital across ICOs. So what is that telling us? There's a tremendous appetite globally to participate in these instruments. But these instruments need a level of clarity as to what is being purchased. Again, people talk about the disruption of the VCs. True or not true, I'm not quite sure, but it looks like this year $1.7 billion has been aggregated into blockchain-related investments by ICO investments versus, I think VC was at 1.2. So we clearly see a trend of more appetite around technology-based blockchain and related investments. This is again, designed for a different format, but we'll just go through it quickly. The reality is we believe most ICOs that have been issued are securities. If we look at down the past, very limited use case of a utility actually being a utility. And I know there's some of our dear friends from the SEC here, so I don't want to overstep my simplification, but if you really think of what most ICOs are doing around technology, whether they're blockchain, they're using that capital to actually build their platform. So there is a very strong use case to say, if you are a token that is native to your app and solely being used on that app, guess what? It may indeed be a utility. But if you haven't built the application that it's going to work on, and you're aggregating the capital from the marketplace in order to build that, guess what? You're probably a security. The other thing to try to point out, even those who may indeed be a utility token, we think the IRS probably has something to say about how you've garnered that capital. If you are saying in one instance, I am not a security, we are a utility, and this token is for usage on our platform only, that may be deemed as a pre-sale of your services. Guess what? A 10, 20, 30, 40, $50 million raise pursuant to that, you may be subject to a federal income tax and revenue recognition. Just a minor detail you might want to look at. And excuse me. And then, I think you go through a couple of things and really looking at what that utility is doing. Again, we point to Howie time and time again. Security token, less scary. Rules of engagement. So if we begin to think that an ICO is a security embedded on top of a smart contract, how wonderful is that if we can take the utilization of this smart contract and the waterfall of clarity? Is this Reg A plus? Is it Reg D? Is it Reg S? Guess what? There's clear rules of engagement of how much money you could raise, when you need an audit, when you have accredited investors, when you have retail permitted. Is this an unregistered offering? Is it registered? You have rules of engagement then dictate clearly AML, OFAC, bad guy checks. You then have a more holistic marketplace that has investor protection, and we can begin to grow. And guess what? If it is indeed a security, isn't it a novel concept that you could begin to take fiat into a smart contract that's a security for first-time issuers? This scales the marketplace beyond what largely is happening in the community is movement of one crypto bit ether into purchasing the next one that people may be excited about. Yeah, I guess that's enough about. Oh, and resale provisions. Yeah, minor little thing here is how do you sell a utility token on a quote-unquote exchange, not an exchange defined by the 34 Act, but that shall be nameless, and all of a sudden you have these utility tokens that have been transacting on loosely defined exchanges that now are deemed securities. Guess what? Time out. They can't trade them in there anymore. So now you have instances that we're looking at remediation programs of how do we help fix this marketplace. What do you do with a utility token that's now deemed a security that can't transact on some of these exchanges, loosely defined, but hasn't been structured as a security? Well, can trade on our ATS as a secondary liquidity or most other places. So now you've done this wonderful thing of trapping investors in an instrument that has no liquidity. Very, very bad result. So these are things that we're examining on how to come up with holistic remedies across the marketplace. And I have to say, and I try to say this as often as I can when having a great venue like this to speak at, the SEC, FINRA have been extraordinarily engaging in this space. we speak regularly to the commission, to FINRA at the highest levels. You have Mr. Cook over at FINRA with FINRA 360, looking to really engage with market participants. How do they better relate and create issues within FINRA for the marketplace? As high as the commissioners themselves in the chair's office, Trading and Markets, Corp Fin, have all been engaged in these conversations. So those of you who think the SEC may be asleep at the wheel, it is absolutely not, both from a positive, and I say it, well, it's a positive and negative. Certainly, the enforcement activity of the SEC is certainly demonstrating they believe most of these are securities, but we believe that the way to manage a marketplace and grow it holistically is not through enforcement, is through a great starting point with the Dow report and the investigative report, some of the bulletins coming out, and whether it's Paris Hilton or Floyd Mayweather, and perhaps other promoters, quote unquote, who may be promoting ICOs and being compensated and not disclosing those. So guess what? Those are all things that we normally would take care of in a security. So I think we have a waterfall of clarity in this marketplace when we begin to think of this as a security. Wow, this is what happens when Vince tries to do a PowerPoint by himself. So sorry. So all credit given to our friends at Token Report. So they did an examination of 226 ICOs and found that only about 20 of them are actually using the token native to the app. That's about 8%. So I'll call this in our good old trading language, the tail of the tape. So if we look at this universe of 206, I'd posit to say, guess what? You're probably a security. So there's tremendous, I say, disconnect between belief systems early on and maybe some lack of clarity, naivety early in the space. But since the Dow report, there's a pretty good wake-up call that you have at least the framework of engagement around what this marketplace is. This is another great slide that I just saw Friday from Architect Partners. This confusion or turbulence in the market of ICOs, how are they being done? How are they being regulated globally? What jurisdictions are shutting them down? If you see this trajectory is really indicating that 34% of ICOs in the past month achieved their funding goal, right? So a cooling off or resetting, maybe a flight to quality, a reassessment of what is actually happening in the marketplace. Again, we think this is a healthy reset thought process to say, what is this going to grow up to be? And I think if we embrace modernization of securities laws that intersect with innovative technologies, we have a massive opportunity to continue to facilitate capital formation in new innovative ways while having investor protection. So, anyway, thank you very much, and I guess that's it for now.